and for businesses and all of that, I want to know exactly what it means, and you get to understand central bank policies, why exactly they matter for planning, pricing, and also growing your business, and how these new measures could actually make it easier to borrow, invest, and plan for the future, which I believe is the most important thing for every business, is their ability to be able to predict what exactly is coming. Yes, so I've been joined by Ebenezer Otokli. He is an economic policy analyst, and he joins me to break down this particular one. Eben, good morning. Hello, Eben. Hello, Eben. Okay, I think I lost Eben there, so we'll try and reconnect him, and then we look at this particular conversation. He's going to tell us exactly what these things mean and how they affect government borrowing, really, and what this also means for small and medium-sized businesses trying to access bank loans. We're also going to talk about, whether these rules are likely to attract more foreign direct investment into the country. So Eben is back on the line. Eben, good morning. Hello, Eben. Hello. All right, I think we couldn't get him. We'll try and reconnect him, and then we can get into the conversation. And also maybe how soon businesses realistically feel the effect of these changes, because once there are certain changes in there, we need to believe that they're going to have an effect. And we want to look at all of that's in our conversation this morning right here on the Business Breakfast on Z. Please don't go anywhere. We'll get into all of that shortly.
But I go dance to the rhythm of the beat. I know say sometimes I fall on my knees. Dance so pretty and pon and coupon. Go give me some peace. I can't baby me feeling the name. Energy also I'm a name.
I have Ebenezer Otokli over the phone lines now, and we'll get into our conversation. And like I said, we're talking about the tighter rules by the central bank and what exactly they mean for businesses and for investors. And I believe it's more about predictability, your ability to be able to see what exactly is ahead and be able to plan. And I think that's a very good conversation for you as a business owner, especially as we try to wrap up the year. So Eben is an economic policy analyst, and he joins us for this conversation. Eben, good morning.
Hello, good morning, and good morning to your church listeners.
Great.
I hope you can hear me now.
Yes, I can hear you loud and clear. Thank you very much for making time this morning. Let's just quickly get into the conversation. Now, in simple terms, what does tighter central bank rules actually mean for our economy?
Okay, thank you very much. So, in economics, we say that there are two main monetary policy. We talk about the expansionary monetary policy and contractionary monetary policy. So when we say that the central bank is tightening policy, then we are basically talking about the central bank contracting the economy, right, in a way. So most often when there are inflationary times, times where there is high inflation, times where production does not meet demand, and which leads to hyperinflation and all that. The central bank then put in measures which include tightening the monetary policy. So in this case, the monetary policy is more like a reference rate for commercial banks, which tells us the rate at which the commercial banks would borrow from the central bank, right? So the Bank of Ghana now tightening the policy by raising it up, right?
Okay.
So currently the policy rate is around about 80%. When the central bank wants to tighten the policy, it will now raise it. Now, when you raise it, it leads to a higher lending rate. So with a higher lending rate, it becomes a bit expensive for private people and people to borrow to spend. So in a way, you want to reduce spending, right? You want to contract the economy in a way so that when people do not have a lot of money at their disposal, there will be more money chasing fewer goods, which will lead to inflation. So we say that most often tightening or contractionary monetary policy is used to control the demand side of inflation, where you are controlling the amount of money at people's disposal to spend in buying goods and services.
Okay. But how do these new rules actually affect the way government's borrowing influences inflation?
Okay, so in such a case, when the monetary policy is tightened, regardless of how high it goes, so most often the government is able to afford. So when the government goes to the bank, for instance, to borrow, regardless of the rate, the banks would be able to, the central bank would be able to afford that rate, and sometimes too in certain circumstances, because the central government is less risky, they're able to get the rate a cheaper rate. But with the private sector, it makes it more expensive to borrow. So because whenever the central bank tightens monetary policy, then it means that the reference rate would also increase, which will also significantly lead to an increase in the lending rate. So if you were borrowing at, let's say, 25%, when the policy is tightened, you would go and borrow at, let's say, 30%. So it increases. And that means that the cost of capital for you has increased, which affects your production and even amount of goods you can bring to the market to sell, because you don't have the means to produce.
I see. So should businesses expect interest rates to stabilize under these measures, or do you think that volatility will still remain?
So I mean, to some extent, there would be some kind of that, right? Policy rates. Sometimes there will be expansions, yeah. But like in every economic textbook, we will tell you that relative stability is very, very crucial in economics for planning and all that. So, for instance, we are seeing the rates coming down. We will not call that tightening. That would be expansion, right? Or in other words, the central bank the last time was to loosen the monetary policy rate.
Right.
So it was loosened, actually. So that is a good news for investors. Let me say, good news for business people, because at that rate you will be able to get access to funds, to loans at cheaper rate for your business, right? But in doing that too, we say that the rate should be at a particular rate where actually it can be stable for some time. It shouldn't be that almost every time we are changing the rate. And for that, the central bank was able to, somewhere last year, we were able to have a stable policy rate at around 25% for a number of months. But still it was high. But now that we are having a lower rate, we are expecting that it continues like that for some time to help in planning and all that, yeah.
I see. Right. But how might tighter borrowing controls improve confidence, especially among local and foreign investors?
Yeah, so you see, because for investors, if you are saving money, or you are buying treasury bill, or you are buying a government bond and all that, when the policy rate is tightened, in other words, the policy rate has been increased. Now, for someone like that who is making an investment, it will be good for you, right? Because you are getting a higher interest on your savings, or on your treasury bill, or on your bonds, because the rate has been tightened. But that also has implications on the economy because of maybe those who want to produce. It doesn't encourage production. It doesn't encourage innovation. It doesn't encourage creativity, because people have ideas they want to implement, and now they need money to do that. But because they don't have money, they would have to go and put the money somewhere and expect the banks to not do magic for them. You understand? So at no point can a tighter policy which encourage investment in more productive sectors, unless people who want to invest by maybe buying bills and treasury bills and all that. Yeah.
But what does all of this mean for small and medium-sized businesses who are trying to access bank loans?
Exactly. So in that case, you see, for what's happening right now, when the policy rate was, should I say, was loosened, right? Or there was an expansionary monetary policy. Now, what happened? It's a means to encourage investment to make loans affordable for smaller businesses, or should I say relatively affordable, because still it will be higher, but actually it's lower than what it was. So it gives them room to be able to access loans at a cheaper rate than it was previously, right? But when we're talking about tightening in each way, then it means that would rather not make it affordable. That would make it a bit expensive. That would make the cost of capital a bit higher for them, and that can hurt their business. Yeah. So for smaller businesses, we say that there is now room for them to now be able to get access to loan at a cheaper rate, cheaper than it was, right? So now if you have any idea, you want to expand your business, you want to start a business, there are more products that banks are offering now to make it easier. The government has also programs like a Jumara and all that in place that if they are well implemented, they can give access to smaller businesses and even medium scale enterprises to engage in some of these
businesses, right? And I asked that actually because a lot of the small and medium-sized businesses, they struggle to be able to get capital and secure loans from banks and all of that.
Yeah.
Right. Okay. So thanks for that explanation. Now, but I also want to know, can these changes actually make long-term business planning more predictable? If yes, how is that going to be?
Yeah. So actually, the consistent changes does not make planning quite efficient, because you don't know what the central bank does next in their next 2 months policy meeting, right? What they decide.
Yeah.
So it makes it a bit difficult for you in your planning. But if you have a stable rate, for instance, currently we have about 80% policy. If it stays like that for some time, then you know that okay, I'm borrowing at this rate, okay, and it's going to stay there. But if you are going to expect a higher rate, then it becomes a bit difficult. You see, and sometimes when we say the rate has to be stable, it doesn't have to be. We are not saying that it shouldn't be reduced or shouldn't be increased. I mean, sometimes it can, but the margins are very crucial for planning. Because if I plan to go and buy something for, let's say, 11 cedis, and I go and it's 12 cedis, it's not too much to afford, right? You can still plan around it. But if the changes are quite frequent and are also quite marginal, then it becomes a challenge, because sometimes the margins between them are quite expansive, so which can create challenges for businesses, and for them to be able to plan well. It's quite crucial that they are certain. There's quite some amount of certainty in the economy to assist with planning. Now you know that okay, if for instance, if I'm giving loan to somebody and I'm giving the loan to the person at a rate of let's say 15%, and now the central bank goes to, let's say, tighten or policy by, let's say, increasing the rate, then it becomes a time for me, because I didn't know what would have happened in the future. If I knew, I wouldn't have given a loan at that particular rate. So whatever we look at it, there can be a disadvantage, whether to the lender or the borrower, when there's some level of uncertainty in the system.
I see. But how does central bank discipline help protect the value of the cedi over time?
Yeah, so the central bank number one objective is to should I say stabilize the cedi, to ensure there's some level of price control, price stability,
Mm.
and the central bank does that by ensuring that it does its, or it performs its regulatory function to perfection. Now, the central bank has to be disciplined in the sense that it does not, should I say, intervene too much in the market. It does not spend too much fees or borrow too much to the government. I think last Friday there was a bill that was passed. There was an amendment to the Bank of Ghana bill to ensure that the Bank of Ghana is more disciplined, doesn't borrow too much to the government. Because if they do that, when they print so much money, they borrow to the government beyond the stipulated rate of 5% of previous year's GDP, then it creates challenges in the economy. So when we were facing, when the government was facing the, how do you call it, inflationary period, somewhere in 2022, it was partly also because the central bank printed money and gave to the government or borrowed to the government at quite a high rate, which created inflation in the system. True. So for the central bank being disciplined, it's quite very, very important, right? Otherwise, it creates challenges for all of us. So they must stick to the plan. They have to ensure that they are going by the medium-term plan and not going beyond it. Even if you are borrowing to the government, it should be within the stipulated rate. Yeah.
Okay. Right. But do you think that commercial banks will become more cautious or more confident in lending under these new rules?
Exactly. So now that the bill has been passed, and I believe that when the minister or the governor does not abide by those provisions in the law, then we can take them on, right? So sometimes it's important that all of us, as journalists and even as economists, we are abreast some of these issues, so that when we get to know that they are going beyond the provisions, we can call them to order, right? That is one of the beauty of democracy, that we can bring them to order. Now there are laws to some of these things. So when they do that, I'm sure that the laws also provide punitive actions when some of these things happen. So we can take them on that.
I see. So please hold on for me. Let me just quickly announce our phone lines in case there's somebody listening to us who wants to join the conversation. Please, you can do that on 0544321019, 0544321019, or you can call us on 0303956641, and we'll give you the opportunity to share your thoughts with us this morning. We're streaming live on Facebook at ZFMGH and also on YouTube at Z Multimedia. Please engage us and we will read your comments for you. All right, Eben, let's continue the conversation. I know you have to go. Maybe we'll touch on two more things and then we can go.
Okay.
All right. Okay, so talking about the rules, I want to know whether these rules are likely to attract foreign direct investment. I know I asked you about investment earlier.
Yeah.
Yes, but specifically foreign direct investment. Is there any nuances in there? Is there any new? Are we going to expect some more?
Yes. Investors are always very cautious, right? So you want to be careful that where you are putting your money is a place where those in charge of the economy are disciplined, that you are not going to lose your money. You want to make sure that if inflation does not derail the value of your investment. Okay, so they are very careful about that. They want to make sure that where they are putting their money, those in charge, the governor, the laws there are quite, should I say, they bite enough, right? So such rules gives them confidence that, okay, these are people who want to do something about the economy, who want to make sure that they are disciplined, right? So just that sends a signal. I mean, in Ghana, sometimes economic information or financial information does not send signals enough. But I mean, in more developed economies, even when you tweet about something, even when Trump tweet about something, it reflects on the stock market. You see it changing. You see stock values operating. You see a lot. So that is quite crucial. So this is actually a positive signal that we want to be disciplined, and that is a signal that is attractive for investors to come into the market to look at how they can invest and take advantage, because we want a market where it's regulated so that the government does not interfere too much, right? Because if you are borrowing money at such quantum, or something economists call quantitative easing, which is beyond the stipulated value, it creates challenges, it creates inflation, it can create unemployment, it creates challenges in economic growth, and that would cost investors. So they are very particular about that. So I believe that these things are a signal to the investors that and even bilateral investors and multilateral how do you call it, interrelation that we have, that we are in charge of the economy. We want to be disciplined, right? Yeah. So the signals are quite should I say positive.
I see. So how when it comes to these things, I want to know, how do controlled government borrowing reduce pressure on private sector credit?
Exactly. So in economics, we normally term this as the crowding out effect, right?
Yeah.
Now, when the banks or when the central bank is the only one borrowing, right? In fact, I mean, ordinarily, if the central bank go to the bank to borrow, and an individual like an investor, somebody who wants to invest in a business, goes to the bank to borrow, the central bank is likely to borrow to the to the bank, to the government, because the government is less risky, right? You know that the government will always be there, even if there's change in political party, the government still exists, is continuum, so the person will pay. So the government will pay, but to an individual, you are not certain whether the business the person is going to do will even thrive for the person to pay. You pay back with interest. So sometimes when the government is borrowing at a very high rate, it crowds out the private sector, and it makes borrowing quite expensive. Even if they would get, right, it becomes a bit expensive for them to borrow, and that can create challenges. That means somebody who wants to set up small tabletop business will suffer. Somebody who wants to expand the business to other geographical areas would also struggle a bit. So that becomes a challenge for them, like I said. So when the government borrowing is not controlled, and now that the Minister of Finance has stated categorically that they do not want to go to the external or capital market now to borrow, that means that they are depending more on domestic market. And if that continues uncontrolled and unregulated, then it's great challenges for investors, because they will definitely be crowded out because they cannot compete with the government.
Right. Okay. So, but how soon can businesses realistically feel the effects of these changes? Does the lag effect take place?
Yeah, the lag effect takes place. It will take some time, because sometimes banks have to recalibrate their systems. You know, that alone will take time. They now have to plan, calculate the reference rate, look at what would be. Of course, they also want to look at a rate that will be quite okay for them, a bit profitable and all that. So it will take some time. Normally, I put my lag at, let's say, 2 to 3 months. Yeah, so it will take effect. Yeah.
But are there some sectors that will benefit more than others?
Yeah, so most of it, when it comes to some of this, because the changes or the margins are quite close. For instance, if lending rate is like 30%, and now the policy rate has been loosened and brought down, you're going to see maybe a change of maybe from 30 to, let's say, 29 or 28%. Right now, it's quite small, or it's quite marginal. So if somebody who is into high capital intensive business, right, for let's say construction, manufacturing, for instance, who borrows large sums of money, for them, even a small change is quite significant for them, because if I'm borrowing, let's say, 1 million Ghana cedi, and there's a reduction on rate of 1%, that 1% is quite huge for me, right? So they benefit a lot, and then they see that it's quite profitable as well. But we cannot take the smaller business also out. They may benefit, but I mean, I would say that the large corporations, their benefit is quite, it's quite significant. Yeah.
All right. So maybe finally, in the long run, do these measures make Ghana a safer place to do business?
It does. It does make Ghana a safer place to do business. I'm particularly concerned about discipline. Sometimes we can put in all the measures, but we need to be disciplined. And some of these regulations or some of these legal requirements that are being put in place to ensure that we are disciplined enough. It makes Ghana a conducive environment to do business when inflation is low, when borrowing cost is low. Business wants to come here, come and do business because they think, okay, I can borrow and do business. Otherwise, they would want to go to other places, our neighboring countries. You see, when we were at the peak of our economic challenges, we lost some companies, right? Because they were struggling to get funds. Inflation was high. Yeah. People were not buying. So they had to relocate. You understand? That's so some of these things send positive signals to them that, okay, it's time to come back. Come and do business. We are waiting for you. We are in charge now. And we want to correct our mistakes. Yeah.
Right. Any final words?
Okay, so my final words always go to the government. It's early days yet. We can't say that we are back. We are back on track. We are doing something right, but we are not back yet. We need to still have our legs on the accelerator and be in control of the economy. We need to be disciplined. Sometimes there are pressures even from within the government. Some ministers or some MPs would want things to be done to favor their constituents. That may also hurt the economy. So it's up to the Minister of Finance to be stand and make sure that it's being disciplined, it's going according to plan. Very, very important that when the political pressure starts coming, especially somewhere 2027, 2028, 2026, this 2027, 2028, where political pressures to start coming, they want to now spend and to get some political figures. We need to be disciplined when we get to those areas. But even now, we still need to be disciplined, and I believe that we are on the way to economic, should I say, buoyancy.
Right, Eben, thank you very much for your time, and thanks so much for sharing your insights with us. We're really grateful.
Thank you very much for having me.
All right, okay. Please do enjoy the rest of your day.
Thank you very much.
All right, so that was Ebenezer Otuokle. He is an economic policy analyst, and he joined me this morning talking about the new rules set by the central bank in terms of borrowing and all of that. He's been trying to help us get a sense of exactly what it means for our economy and also for businesses and all of that. And he says that this is actually going to create that opportunity for businesses to be able to, as it were, prepare and predict what is ahead, which is actually something very important that businesses do not joke with at all. So that is that. But if you miss any part of this conversation, you can visit our social media platforms. We are on Facebook at ZFMGH and also on YouTube at Z Multimedia. You may want to visit these platforms and also get to play back what the conversation that we've had this morning. If you have any comments, feel free to send them to me on 0544321019, 0544321019, or you can call me on 0303956641, 0303956641, and then I will read your messages for you. We'll take a quick music break, and when we return, we'll wrap up for today. Please stay tuned.
Chapeau, yemma wife in chapa, yemma wife in chapeau, yemma wife in chapa. Afia to ya, yedini pepepe. Afia to ya, yedini pepepe. Papa no ye, bonny crow. Papa no ye, bonny crow. Afia to ya, yedini pepepe. Afia to ya, yedini pepepe.
Out his sauce, Uncle Lars out his sauce, Uncle Lars out his sauce, Uncle Lars out his sauce.
Samiara kifali, Christmas is sambata, Samu tati ni wabi. Papa no ye. turabifurije noheri nziza
Yesu Kristo Masia Bethlehemu Maria mama mtakatifu Yesu Masia Zambe Papa Noye